This is a video on Garvin's construction company using the percentage of completion contract method. The link to this the activity can be found and the link to this video, and also it can be found online on Blackboard. All right, I'm not going to read the facts. I'm going to hope you can do those, but we're going to start out doing the computations for year 2011. So what do we know about Garvin's in 2011? Well, the contract price that they're going to have, so the contract price is $10,000. So this is what they're going to get paid for building this oil refinery. In year one, they have some costs. So their costs in the current year were $500. They had no prior year costs. The prior year costs were zero. And so total cost to date are $500. Okay. They estimate at this point in time, they're going to estimate cost to complete, and we're going to estimate at 2011, the estimates cost to complete are $7,500. So the total estimated costs then of this contract, or the total, let's just say total costs, because it does include both some estimates and some actual costs. So total costs are $8,000. Okay, so there's a couple things we can start to determine now. So if we know that the contract price is $10,000 and the total costs are $8,000, we know that the total profit, the total estimated profit at this point in time, is going to be $2,000. They're going to get paid $10,000, and the cost to complete it are $8,000. And we can also calculate the percent complete. So the percent complete is, and I'm going to do that over here on the right side of the screen, the percent complete is, well, how much have we done so far? Well, we've done $500 of the costs in total, right? We've done these. And we estimate that the total cost to complete this thing are $8,000. So if we've done 500 and we think the total costs are $8,000, then we must be 6.25% complete. So at this point, we're 6.25% complete. Okay. I'm going to skip the billings in the current year and current year collections because those are given. So if we know that they're going to come into, those two journal entries are going to come into play when we do the journal entries, those two facts. So if we know that our total estimated profit's $2,000 and our percent complete is 6.25%, then we know what our estimated profit to date is. So it's the 6.0625 times 2,000, and that is $125. So that's how much profit we're going to recognize through this point in time. Okay, so the total contract is $10,000. The percent complete is 6.25%. So how much revenue should we recognize at the end of the current period? Revenue to recognize. And again, the way this method works is we're going to look at what the entire contract price is. We're going to multiply it by the percent complete. And so in this case, we're going to recognize revenue in that first year of $625. So we're going to recognize revenue of $625. Our profit we're going to recognize is $125. So our cost of construction Well, here, let's do this. Let me don't run ahead here. Let's take this number. I'll erase this here. So let's take our revenue. Let's subtract out gain or loss in the current year. And that's the 125 we're going to bring down here. We're going to subtract that out. So let's then put in costs of construction. And this is basically like a cost of goods sold number. All right. So these are the computations that we need for the first year. In the next video, we are going to do the journal entries for the year 2011.